Good morning, trading world. It is August 3rd, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. There's a lot of talk about, are we headed into a recession? And for that matter, are we even in a bear market? The government has a department to actually officially make the call. It's called the NBER, National Bureau of Economic Research. Now, the definition of a recession is a period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. Two things to know about the government is that they are slow and that they cheat. What will the government do? They will change their definition of recession. Well, now it can't be the first quarter of the year, so we get a mulligan. So we change the definition. Now we're looking for a third quarter, basically. One of the things that you can kind of get some foresight on, and why it's so important why earnings itself are so important. Not specifically earnings, but the guidance call. A lot of people may not pay attention to that, but the guidance call that we get around earnings, especially environments like this, are the most important information that you can have. Because in truth, you can have the numbers before earnings hit, and you still probably wouldn't know or wouldn't get any advantage as far as trade bias. But the guidance is something that's so very important. And getting into why that guidance is so important, places like Walmart, Facebook, and other large cap consumer direct companies, they have the workforce that's almost like a small economy. And they compile enough consumer direct info that they can see shifts in consumer behavior way ahead of the government and their slow as bureaucracy. All week, we've had big market cap companies come out with low guidance for the coming quarters, basically telling us they are preparing for a recession. And why has the market not rolled over and died? The economy has entered into this bizzarro world where bad news is good news. Right now, the Fed's #1 job is to fight inflation, and the only weapon left is raising rates. However, the equity market has gotten spoiled on free money and hate the thought of rising interest rates. So the more bad news we get, the more the market is in mind of thinking it will help the Fed reverse its course of raising rates. The market is a pricing mechanism, pricing in events well ahead of schedule. I just wanted to bring their website up. You can go back if you're interested and actually read the business cycle dating information, where they tell us that we're not headed for a recession, and they try to give us reasons why. But if you've paid any attention to the government at all, you would know that the government is very slow, and that even if we are headed into a recession, by the time they get to the point and get the information out to actually announce it officially, we'll probably be a couple weeks from coming out of that recession, as with everything else they do. So it's nice that they have this data collection agency, but it really does us no good if you're waiting on them to actually send the signal, as with everything else. But it is important to pay attention to the guidance reports on these mega cap companies, because they're basically giving you the data before the government compiles it. And there's no bias or no stretching the truth in it to get a certain narrative out of it. So that's the importance of listening to guidance from a lot of these mega cap companies. With that being said, let's bring up the key levels to watch for the day. All right, here we are back with the key levels for today. Starting on the resistance side, we have our jack resistance at 410 to the 411 area. Then we have our queen resistance 412 to the 413 area. And then our king resistance 414 to the 417 area. On the support side, we have our jack support at 409 to the 408 area. Queen support 407 to the 406 area. And then king support 405 to the 402 area. The main thesis for today is bearish, closing below the 408.06 with a projected target low of between 407 and 402. The alternate thesis is bullish, closing above the 408.06 with a projected target high of between 411 and 417. The current major channel we are in is 397 all the way up to 416. And the next major channel up is from 416 to 425. We pretty much have a volatility box going on from 413 down to 405. And I expect to cover this entire range and more over the next 2 days, ending with an all-out effort up from the depths set overnight on Thursday or early Friday. This all-out effort should get us to peak into the next major channel above 416 into that, or below the 425 area, but somewhere in between there, 416 to 425. I'm also looking for Thursday to pretty much have that sink back to retest the more recent lows and kind of stretch and break down to that 402, 400 area somewhere. From here, let's get into the scenarios of the day. All right, today probabilities are pretty close on all the scenarios, but the most probable scenario we're going to start with is our rounded reversal day type structure. We could get a continued push higher toward jack or queen resistance area and find midday chop around either the queen or king resistance before spending the same energy we use going up to come back down the second half of the day. Also, be aware of the vice versa alert on our rounded reversal day, because we could very well started where we continue down at the cash open toward the Jack or Queen support area, and then finding our midday chop around the possible Queen or King support area, and then again using the same energy we used to come down the first half of the day to go back up the second half of the day. So that's our vice versa warning on the rounded reversal day type structure. Alright, the second scenario is our expansive range day structure. We could look to set a decision area low boundary around this Jack or Queen resistance area, then chopping back and forth to lower the rest of the day. So that's our expansive range day structure. Look for boundaries to be set or hard boundaries to be set, and basically chop back and forth between. And here we have our last scenario, which is our trend day up. We open gap up and start with a fade back toward the previous close represented by the blue line. We find support on or before the previous close, then begin the uptrend for the morning. We find midday chop around either our possible Queen or King resistance area, and then possibly start the second half of the day with a head fake, assuming or looking like we're going to continue the strong trend for the morning, but end up fading off of that going into the close. So those are the scenarios to be aware of. Looking for Friday to be a pretty big day. And this is going to kind of key us in depending on what type of day we have Friday and where we are on the major time frames. And that major time frame I'm keying in on is actually the weekly, to kind of see where we're going to go from here. As always, please know and understand your risk. To me, this is the most important thing as a trader, which is protecting the capital that you already have, and we do that by knowing and understanding the risk that we have on in each position. Hope this helps, and as always, hoping you have a positive trading day. Have a great one.